Welcome everybody, thanks for joining me. This is Mike Hamilton from Trade the Easy Way, and I'm just going to do an update on what I'm seeing in the markets here on Tuesday the 20th. US markets have still got 2.5 hours before the close. So what I'm seeing at the moment is a pullback into this Monday the 5th of January mark. So we pulled up and we went sideways, failed to get into this resistance and just pulled right back. This process started on Friday, and it's Martin Luther King Day yesterday, so it's the first full day back for this week. So it looks likely that we can see at least 430 and possibly even a move all the way back to Friday the 2nd, which would reconnect us with this. I think it's an 89-day average down there at 47,800. So unless this turns around and closes above 48,800 plus, excuse me, sorry, I just paused that for a cough. Yeah, so it looks likely that this is at the moment just pulling right back. Now, this is quite a normal, healthy move in the beginning of the year. We had an exuberant start to the year, and it all lost wind, lost energy, and now we're doing a boomerang retracement right back to the very beginning of this year, which of course is only 20 days away. So here's the 50-day average at that 400 mark as well. So that looks as if that needs to be kissed and tested. Okay, so where do we go from here? If we close today above 48,800 plus, then I can see us going back into this resistance up here. But like I said, as I started off by saying, I think we are likely to see this come back to 47,750 area, if not lower. And certainly, let me draw this line. This is the critical line. Where am I going to take it from? Yeah, I'll take it from that low to the January 2nd low. So if we stay out on the underside of this funnel, then expect to see lower numbers. Okay, but this is good. I mean, if we come into 47,700 and hold, then I think we can perk up and get higher. I think it's quite likely, if we close under 47,700, I can see us coming all the way back to 45, 46 down here, which would be November. So I mean, November's not that far away. So for this market to come to retrace all the way back to November is not alarm bells. I would see that as a natural move of the markets, just to recalibrate and pull back. Okay, so we need to be careful at this stage. Let's have a quick look at the FTSE and then move on. Hang on one second. Yeah, there we are. So yeah, FTSE is at very high RSI, showing the same traits as the Dow and the US market. Surprise, surprise. And so the 25 highs would take us all the way back to 99.30. So I think that's highly likely now that we will see that, and if we come down there and fail that, hold on to your hats. But so at the moment, if you're looking to trade this intra-week, any pullback to 180, 200, it could be sold into. Stop. You don't need to give it a lot of room. Give it a 50 pip stop and see if that can wind its way all the way back to 99.30. If we break that, then we are coming much deeper into November support as well. here is the indication of that. There's a little funnel pattern. We showed weakness on Monday, deeper retracement today, deeper looks likely. Okay, so be warned. Right, let's look at stocks. So I talked about BT on Friday. So from that Friday, this is what I'm seeing in BT. It's a slow one. It's a slow burner. This is not going to potentially not going to make a really big bang in your account. But if we sustain this trend line breakout, so I bought at 179. We've seen 187 today. So any move back to that 180, 190, 180, 175, 180, retesting this trend line, and if that holds, then I think we can come and see 190, £2, and if that really gets going into 220, I'm talking about weeks and months here, not hours and days. All right. So every time this pullback last year, so we pushed up, dithered, did another little run, and then spent quite a while, a couple of weeks pulling right back, went up, pulled back, and so on. You get the picture. So all these little dips in BT got bought until this finally really did a break up, pulled back to the trend line support, and then did a really nice run into 218, 220. Okay, at the moment we've got a potential head and shoulders. So this is the neckline. So if this head and shoulders worked, so it's divergent down here on this recent low in November. So if this can hold, any pullbacks down here can hold, then I think we can wind up. Alright, this is a setup that I like a lot. I'm looking at Fibonacci ratios. There was a 50%, I know that's not a Fibonacci number, 50% nonetheless, it's a good healthy ratio that quite often gets bought. In fact, this is so bullish, 170 would have been an ambush retracement into that Fibonacci ratio. That didn't happen. They bought it up before, so that's why I think this is a higher probability trade. Okay, on BT, so things like Tate and Lyle, I took it up to £4 and got out, and we still can't close above the 50-day average. This thick average is a 50-day average. I think that's an 89 and a 200 there. So we're underneath all the key averages, looking like we could see 350 and even lower. So all I did with this one was took it up into that little move, got out. The volume didn't support, it's low energy down here because of low volume levels. The buyers, the institutions, the fund managers did not follow through on that, and as is evident on the volume alone, volume's the lifeblood of any market. So that's why I have so few indicators on my charts, so I can just really focus on the volume and get to grips with that. This is Softcat. See, this is why, so it's crashed right into the 89 average. So a very sweet move on a lot of volume, but then we're boomeranging back to the breakup area. So if that comes down to 1370 and holds, and we start to see an increase in volume in buyers here, then something like Softcat is a good option. So it pays just to take a trade on support, take it off at resistance, but if you're interested in the longer term, if this comes back and holds 1370 on volume, then you stand a better chance of getting a runner. Markets don't tend, as we all know, markets don't tend to go straight up. Here, when this took off on volume, all this did was it hit resistance and came right the way back to where it started from. And then, so you've got a 1, 2, 3, 4, 5 wave move. So that's what I'm looking for on this one. If that's wave 1, ordinarily you would expect wave 2 to be around the 14 mark. But I'm quite happy for that to come all the way back, as long as it holds there and pushes up. Right, I've got a lot to get through, so let me just hurry up. Let's take a look at the pound while we're at it, and get our heads around the pound. So this dip in November, higher low, held this area here, 131.40, and then went on a little run. But if we end up with a lower high, series of lower highs here, which we are at the moment, and that then breaks this area here, 133, then I can see this rolling over. I'm going to see dollar strength, and that's what I'm anticipating. At the moment, that is not playing out. We're above all the averages, we're holding support. So at the moment, these areas are buyable, but I'm just concerned that we're seeing some weakness in this one, potential sell signal. If you're looking to short this, I would try and short this up at the 160 area, so a retest of this drop zone. And in the meantime, so a short-term pickup, but if we hit that area there and that drops, closes lower, then expect that to wind its way down. Okay, so we appear to be holding at the moment. I'll just clean this up for you. Above all the averages, we are pushing higher, but there is weakness, and it's this area here, 136. That would, if you really want to get short and stay short, that's where I would aim for. Okay, back to stocks. I'm still in this sabre. That's holding just. So held this support down here at 124, 125. It's pushed up into 134. It's holding on. The volume's all right, but we need to get above this 140 plus. By the way, at the moment, before I forget, the earnings season for the UK is quiet. So as we get towards March and April, I will comment more and more on stocks that have earnings. There's a lot of trading announcements at the moment, but not end of year accounts. Right. Stocks I like on a pullback. I would love to see SSP Group pop back to 170, 175. It's been on a sweet run here. So we had a little head and shoulders here, shoulder, head, shoulder. There's the neckline. Decent volume, bang, up through the 205 into 2010, but then we're just pulling back. So you can see this average. I can see this at some stage at least popping back into 180 to reconnect with that average. If that gets bought, then I would suggest you want to get back in. Otherwise, I'm trying to be patient on this one. I'm looking for a deeper pullback on SSP Group. EasyJet is suffering. So we had a pop, pull back to the breakout, broke underneath the breakout area and then pop back up. So we're seeing 520, 530 recently, but this is a very, very interesting area here. Watch for the 475. We are lower at the moment, but if we can come into 470, 475 and hold, and ultimately break through 490, I think this can go on a run. EasyJet tends to be week this time of year. It does not do as well in winter, but as we get into the warmer weather, if the oil price can stay down, then I think EasyJet could be a good one for the summer, or certainly the spring. Okay, this is probably my top watch for the moment. This is called Relix. It's a data cruncher, and so this has come from 41.40 all the way down here to 30. If this turns around and holds above 30.50, I'm going to buy this with a stop underneath these lows and see if it can retrace. Why? Because this has had a really sweet move. It saw a lot of volume coming in on these dips here in April last year, fallen out of favour, but we've come right back into December 23 levels. So if we stay down here, forget it. I'm writing this one off short to medium term. But if this pops back above 30.50, I am in. It's REL. Ticker is REL. It's called RELX, RELX PLC. And I'm liking the look of that one, so I'm keeping tabs on that one. This is a defence stock, Quintech, and when this pulled back in December down there at £3.90, £4, it's popped up. So now we are higher RSI, so I'm going to have to leave this one, but any retracement back down, so if we get a lower high here and retracement into this trendline support down there around about 450, 460, then I am in. This is Chemring. The reason why I'm focusing on defence manufacturers is because of the geopolitical environment and the pressure to arm. So not slowing. December again, we were down there at 450. We've just recently seen just above 550. So any retracement into 490 or lower would get me in, as long as we had decent volume. And that's on Chemring. I'm liking this one a lot. This is Sage. Let me just check something. Okay, it's got a price earnings ratio of 24. This is a very key area. This is where we broke out here November 24, and we look as if we hold here, then I'm in, and we've seen 1350 on this one. Volume has been healthy. These are pretty healthy levels of volume. Couple of spikes higher. I'm going to give this a little bit more time. I want to see if this can just close a little higher, really engulf Monday's price, and then I will take a trade in Sage. This is a good example of why the US needs to take a breather. This is AMAT in the US. So April we were down here at 123.50, pulled back to 154, and here we are recently touched 330. Apple's coming off. So you know, these markets have had huge runs, and they just need to take a breather, I think, and possibly more. I mean, if this starts closing under, see a chart like this, and it starts closing under support like that, then expect much deeper retracements. Good example of what's happening out there. This is Apple. And so if I just simply show you what's going on in Apple. Back in April we were 167. So next stop for Apple is 240, and it looks to me as if that could come all the way down to 220 easily. It's just been on a long journey. Currently very oversold on the RSI, but any pullback to 260, I think we'll see that step down. Okay, that's why I am cautious. If a stock like Apple can't hold up, could give good indication. Another example, this is Broadcom. Got cranked up to 426.50. Sold into that, and now we look as if we're heading for 315. Alright, so I'm liking Sage and REL in the UK, and that's what I'm doing for the moment. Keep waiting for pullbacks on Quintech and Chemring, and the US just staying out for the moment while the US sorts itself out. Alright, I will get back to a regular Monday slot, and hope you can join me. Alright, thanks very much for everybody who came along, and bye for now.